In this video, I'd like to talk about the very important topic of anti-money laundering reporting. Now, you might be thinking, what? Anti-money laundering? Well, taxpayers have an obligation to report foreign financial transactions that they've engaged in. Now, most taxpayers don't even have a passport, may never have visited even Canada and Mexico on vacation. They have no idea that there's anti-money laundering reporting obligations. And this goes to tax preparers and accountants who have no idea about the seriousness of what I'm about to describe to you. So it's very important that you know about this topic so that when tax season comes around, you can ask intelligent questions to make sure your tax return is getting done right. Money laundering is the process of taking dirty money, which is money that is the proceeds of crime, and trying to pass it off as looking as clean money. And people do that through moving it through a variety of set of accounts. And cryptocurrency is a common vehicle for doing this sort of thing with. So the way the U.S. works to combat money laundering is to place a reporting obligation on U.S. taxpayers to report foreign financial transactions if the total dollar amount is in excess of a certain filing threshold, to not be too burdensome. Now, there are two money laundering forms that you as a taxpayer have to file if applicable. The reason there's two forms is because there's two different sets of law. One's the Bank Secrecy Act, which gives us the form called FBAR, also called FinCEN Form 114. The second law is the FATCA law, which went into effect in 2010, and the form is actually an IRS Form 8938 for reporting specific foreign financial assets. Let's talk about that. Here is the logic that the U.S. uses, that honest people will report on these forms. And if you fail to file these forms, then you must be a dishonest person, because dishonest people try to hide. So that's their logic and how they approach these things. So it's very important to not be treated as a dishonest person or a criminal, that you file these forms when appropriate. One of the challenges with this is that if you trade on DeFi platforms or peer-to-peer platforms, you have no idea who the other person is, the counterparty of your transaction. So therefore, you cannot assume that they're a U.S. person. You have to assume that they're a foreigner, and therefore the value of that transaction should be reported on this form. Now, the form would lend you to report every single one of them, but what we do is we aggregate all crypto transactions into a single line item, if you will. And what we do then is add the sum of all your DeFi transactions, peer-to-peer transactions, added into one line item and list it on this form. That could be a significant number. But with both these forms, I'd have to say that they're two forms that it's safer to over-report than to under-report. There is no tax associated with either one of these forms, but failure to file the FBAR is a $10,000 penalty if it should have been filed. Failure to file the Form 8938 when required and you exceed the minimum filing threshold, that is a $10,000 penalty, which grows to $50,000 in 6 months.